The Turkish government has announced measures to bolster the lira and help consumers cope with the rising cost of living. The new policies aim to make local currency assets more attractive as the country deals with market swings that have worsened inflationary pressures. As Paolo Montecillo reports, the policies have had an immediate impact.
The Turkish lira has seen its biggest rally in 4 decades. That's after the government unveiled radical reforms to counter market volatility that's fueled inflation.
From now on, none of our citizens will feel the need to convert their deposits from Turkish lira to foreign currency over concerns that the exchange rate will be higher.
Ankara says it will compensate depositors for losses they incur due to currency fluctuations. That compensation will be tax-free. The central bank's also opening a new channel through which exporters can get dollars at more predictable rates. And the government's hiking pension subsidies to 30% from the previous 5%. The lira rallied around 40% after the announcement, but it still lost more than 70% against the dollar this year. A stronger currency will bring down the cost of imports like food and fuel. That's expected to stabilize consumer prices, which rose more than 21% in November.
What's going to happen is prices are going to come down. They have to come down because they're now much easier to purchase. The cost of buying these products are much cheaper, and as a result, this will very much slow inflation in the coming months here, and that's great news for the Turkish consumer.
The government says the changes are in line with its policies to encourage exports and investment.
Investors will be encouraged to move towards Turkish lira-based assets by insurance of government bills that are indexed to public economic enterprise revenues that are transferred to the budgets.
The Turkish economy has outperformed its emerging market peers this year, with GDP expanding 7.4% in the third quarter. President Recep Tayyip Erdogan has told businesses and consumers they should feel the full benefits of that growth soon, because he predicts inflation will slow in the coming months. Paolo Montecillo, TRT World.
For more, let's go to Taha Arvas. He's an adjunct professor of finance at Bogazici University in Istanbul. Taha, thanks for being with us today. Can you explain exactly what this provision is and how it is going to work?
Sure. So what the government is saying is if you have Turkish liras and you invest these Turkish liras in a special bank account that all banks will be able to set up, you can still stay with your same bank. What happens is you choose a term that the money will be in your bank 3 months, 6 months, 9 months, etc. And at the end of that period, if the return on your investment is whichever is greater, the policy rate that the Central Bank of Turkey has stated, or the loss that you incur because of a potential depreciation of the Turkish lira, the government will subsidize that, will pay for it. So in other words, you can't lose money by keeping Turkish liras relative to the US dollar. That's what this means.
Right. So in the special bank account, I mean, a term will be chosen, as you said. What about the exchange rate? So this, the strike price at which this put option essentially will be exercised. I mean, will this be decided?
Right. So that's exactly it. The date that you open this account, there's a specific time. I believe it's 11 in the morning. At that, that's the exercise price. So that's the price that you are locked in at. And then at the end of the term, 3 months later, 6 months later, whatever, if the Turkish lira has depreciated against the US dollar relative to the price where you entered into this account, then you get that money back at the end of that term. Yeah.
Right. Interesting. And Taha, we've obviously seen a very big rally today and also yesterday in the FX rate. Do you think this move was also driven by bearish speculative positions, essentially people deciding not to short the lira anymore, and hedge funds as well, not just retail investors?
Right. What happened is there was a massive short squeeze. This is not something that people were expecting, obviously, that the government would come up with such a plan to shore up the lira, and people who were short the lira got margin called, squeezed out of their positions, and that led to a further appreciation of the lira. I'm sure this will kind of be a shot against the bow for those people who have thought of further shorting the lira. If they continue these shorts, any type of measures like this will very easily short them. Excuse me, will squeeze them out of their shorts, and we'll see what we saw today. So over time, if this continues, if confidence returns to the lira as it has today, then we should see appreciation in the currency.
Right, so in Q3, we've seen a very good figure when it comes to GDP growth for the Turkish economy. Inflation, though, remains high. How is this measure going to impact inflation next month? Also looking into next year.
Sure. So inflation, one of the reasons, there's two or three reasons why inflation is high. The first one is because much of these consumer goods are based on imports or are based on things. There are components of them that are imported. So even in the video, I can see fruits and vegetables at a market. A major component of those prices are energy prices, because they need to move from the south of Turkey to the north of Turkey, for example, to Istanbul, if we're talking about Istanbul, for example. And those energy prices are dollar denominated. So if there's pressure on the Turkish lira versus the dollar, then it's more expensive to transport them to city centers, and when that happens, there's inflation in those prices. So this type of move, shoring up the lira, will help decrease those prices and will reverse this inflation trend that we've seen in recent months.
Right, and one last thing, Taha, it's very difficult to make any sort of predictions really when it comes to COVID and the new variants, but what impact do you think the Omicron variant might have on the Turkish economy, and do you think further lockdowns are likely in Turkey as well?
I don't think so, only because the initial findings we've heard, or the initial news out of countries with vast spread of Omicron, of the Omicron variant rather, is that it appears not to be as deadly as the other variants. If that's the case, Turkey is actually very well vaccinated. There are steps that the government's put in place to encourage people to get vaccinated. So having said that, and the fact that it appears to be a less harmful variant, I don't foresee lockdowns. And as we know, complete lockdowns over a long period don't actually help the scenarios as we've seen from countries that have experienced that.
Taha Arvas, thank you very much for this analysis. Much appreciated.